Most people just need to do the basics. They don't need anything extremely advanced or complicated. If you're new to my channel, my name is Pascal Manigat. I've been in the health insurance and life insurance space for over 8 years and helped over 100 clients with their health and life insurance needs. I made a few videos in this topic, and I kind of want to elaborate and give some examples of clients that I've helped structure life insurance appropriately for their situation. Everyone's situation is going to be a little bit different, but what I hear a lot with people sometimes when I have conversations is I like the idea of infinite banking, but they don't have that same amount of money to save or the amount of money necessary to save to make it worthwhile. They're only going to start with, say, for example, $100 or $200 a month. And I get a lot of these advertisements can be very compelling, saying that you could be your own bank, forget the bank, all that type of stuff, right? But you're not going to do that with $100 to $200 a month, especially if you're 30 or older, right? Because you have to have a minimum amount of insurance when it comes to insurance policy types, right? For example, for most insurance companies, whether you're getting an IUL or whole life, the minimum for a fully underwritten whole life or IUL policy is going to be around $100,000. And for most people, that's going to mean you're going to have to save a minimum of $400 a month to maximize your policy cash value. And I'm going to show you a direct example of what I mean by that. This example that I'm showing on the screen is to give a perfect demonstration of what I exactly mean. So if we look at this policy design, there's a $100,000 death benefit. This is the minimum death benefit that you'd be able to get with most insurance companies when it comes to IULs a whole life. They're going to require you to have that minimum, right? And if you're a 35-year-old male, right, and you're trying to save money for cash value purposes, let's say you're trying to save $200 a month, you realize in the first few years there's no cash value, right? And usually that's a red flag when it comes to IUL policies if your goal is cash accumulation, is that there is no cash value in the beginning years, right? And if you look at something known as a guideline level premium when it comes to the amount that you should be saving annually if you want to max on your policy, you'll realize that number in this particular policy design is $5,000. So even if you got the minimum amount of insurance, just a $100,000 death benefit, right? And you're only saving $200 a month, you're still halfway behind in terms of being able to max on your policy. And this is the issue that you might run into if you're older and you're only able to save a certain amount of money in the policy, right? So what I would say is the idea of max on your cash value policy or being your own bank and things of that sort, it makes sense when you're contributing a lot of money in your policy. If you're not contributing a lot of money in your policy, you're going to realize that you're not going to really get the intended purpose of the policy of like the cash accumulation, the early access, and all the things that people talk about in different types of social media channels and everything. And what I would say to someone that's trying to do this strategy is kind of slow down, right? The first step when it comes to making money and saving more money is just being able to consistently put money aside. The chances are if you're only putting 200 away at age 35 is you kind of have a problem saving, right? Or you have an income problem. I would focus on those things first before I would decide another responsibility on your plate. Make sure that you have enough money that you're putting aside just in savings. Build up savings. Have 3 to 6 months in savings first. Focus on just a habit of consistently putting money away every single month, right? And if you want life insurance, that's fine, right? There's nothing wrong with having life insurance to protect your family, right? Term policies for people that might not be able to save as much money or put as much money aside might make a lot of sense, especially if you have younger children or you have children that might be going to college and you want to make sure they're protected if something happens to you. You could get a term policy of $500,000, $700,000 if you're of decent health for less than $70 a month, and that's a great way to protect your family. And if you want a permanent insurance policy to make sure things like funeral expenses, final expenses, or you just want to leave, you want to guaranteed leave something for your family, you can do that. But just know when you get that permanent policy, the idea isn't going to be for infinite banking, being your own bank, or being able to have some sort of supplemental tax for retirement. The purpose of the policy will just be for death benefit. Now, here's an example of a client I actually helped get a policy design where they were congruent with what their goals were, right? They were saving about 100-ish a month, a little bit over 100 a month, getting 100,000 of death benefit. And this client is a little bit older, But she just wanted the insurance policy, just for the purpose of it being insurance. And now here's an example of that. So with this particular client, she got a preferred rating, the best rating that she could get. And also, she has $100,000 in terms of death benefit. So since her goal is protection, I added something known as a no lapse guarantee provision in this Index Universal Life policy, which basically says as long as she pays the minimum premium, the policy is guaranteed not to lapse all the way up to 120, right? And this is going to allow the policy to be a lot less expensive than it has to be, right? And if she wanted to put the absolute minimum in the policy, the only amount she would have to pay at 57 years old would be $106 a month, right? And if you think about it, it's pretty cheap when it comes to life insurance for our 57-year-old. And that death benefit is almost guaranteed to last her entire life. Obviously, it's an Index Universal Life policy, and we're adding the no lapse guarantee provision on it to make it a little bit more safe, to almost guarantee that the policy will last all the way for the end of her life if she lives past 120, right? So at least it's likely to do the goal that it's intended on doing at a very inexpensive cost, versus for people that are trying to maximize the cash value in the policy and everything like that, you wouldn't be able to have some of these provisions, and it's not going to work as well. And don't get me wrong, there are some great policy designs if you're trying to front load a lot of cash in a policy. And I personally have policy designs for myself where I put a lot of money away every single year, every single month into my policy to maximize the cash value component. But this strategy isn't suitable for everyone, right? You need to make sure you're in the right financial situation before you decide to shove a lot of money into a life insurance policy. And in this channel, I go over many different types of design types. So if you're looking for that type of strategy where you're trying to maximize your cash value policy, I'm going to be going over in videos in the future on how that could work for you. And also I have past videos where I go over this in detail. But at the end of the day, the main point I want to get is this: life insurance is not a get-rich-quick scheme. It's something that you use to build and protect your wealth over time. It's not something that's going to increase your net worth overnight or anything like that. And a matter of fact, when you put money initially in your life insurance policy, you technically have less than what you put in, right? Because there is the front-loaded fees when it comes to setting up a life insurance policy. But over time, you end up growing more money, but it's not the type of thing that as soon as you put money in it, you're going to see the return right away. The idea really is to prioritize things like tax-free retirement, protecting your assets, making sure you're protected from market risks, supplemental retirement income along with other investments you built on. That's really the idea when it comes to using life insurance as a tool. It's not necessarily to kind of replace all of your assets or anything like that. If you find this type of content valuable, make sure you like, comment, subscribe. I'm going to be trying to make as many YouTube videos like this where I explain some of these concepts in detail. If you like this type of content, make sure you stay tuned, because I'm going to be putting a lot more content out in regards to these topics, especially life, health, and retirement.